Don't miss out on the Florida First Time Homebuyer program, Hometown Heroes. It came out July the 1st, $125 million, and half of it is gone. We're going to break it down today. Hey friends, so as expected, the Hometown Heroes program that came out July 1st in the state of Florida is half gone. $62 million have already been reserved out of $125 million. So today is July the 20th. We're just about 3 weeks in. So we're expecting this to be gone probably within the next month or so. So it's very important if you have any friends, family, or clients of yours looking to do this program that they find a contract and that they lock in right away. In previous videos I talked about, I thought this was going to be gone in about 90 days, and I think I'm about right on that. But what I want to do today is listen, for those of you that don't know about the program or they don't know why it's so special, I want to break down the numbers and just show like a real life scenario of what we're getting for our clients through this program. So let's break down the numbers in real life. So I got a slide here where I broke down the difference of a conventional loan, 3% down, just a standard first time home buyer loan, and then the same loan but using the Hometown Heroes bond program through the state of Florida. So if we look on the left hand side, the standard conventional loan, $500,000 purchase price as an example, down payment 3%, loan amount $485. Current rates on those is about 7.25%. Principal and interest $33.08, and then we have all of our closing costs. So a standard closing cost, you're right around $5,000. Then you also have doc stamps and intangible tax. I broke those out separately, $26.67. Points, usually you're going to have at least 1 point on that loan, a 3% down conventional. So that's $48.50. Prepaid items, that would be your yearly insurance and also setting up the escrow account for taxes and insurance. We're going to estimate $8,000. So total cost, $20,417. When we add the 3% down payment to that, total cost plus down payment, $35,417. So listen, without this program, just on a standard conventional deal, if you want to buy a $500,000 house as a first-time home buyer, you're going to have about $36,000 in the bank. Now, if we take this same program and we layer on the Hometown Heroes program, you're going to see why this is so cool. And this is why there's already $60 million reserved. So basically the same deal, down payment 3%, loan amount $485. Interest rate now is a subsidized interest rate through this program. So 6.5%, no points. So the rate is lower than just a standard conventional loan interest rate. Principal and interest payment, $3,065. So you immediately save $243 a month just from the difference of the two programs. Now let's break down the costs. Standard closing cost is the same, roughly about $5,000. Doc stamps and intangible tax, you are now exempt because it is a government loan through the state. Points, you are now exempt, no points as well. So that saves another $4,800. Prepaid items, of course, those all stay the same, your taxes and insurance. So your total cost, $12,900. Total cost plus down payment, $27,900. So you can see just from the savings of your exempt fees, you're already ahead of the game. You're saving money on closing costs, you're saving money on your monthly payment. Now the state of Florida, Hometown Heroes comes in, and they're going to provide you a 5% of your loan amount, 5% bond, meaning it's a 0% interest. They're going to give you the money, but you don't have to pay any interest on it. Now it is repayable. You have to pay it back whenever you sell the house, if you ever convert the property to an investment property, or if you ever refinance, you do have to pay it back. So Hometown Heroes grant, $24,250. Cash to close is now $36,50. So the tale of two homeowners, one using the Hometown Heroes, the one not using it. So the one using it, cash to close, they're going to buy a $500,000 house with literally $3,600, and their payment's going to be $243 lower than a traditional conventional loan. That's why this is such a great program, and that's why it's flying off the shelves. I want to take it one step further because I have some clients that are still on the back porch saying, listen, I got a good rental, I don't want to move, maybe I'll just continue to rent. Okay, well, let's just say that's the case. What's the opportunity that you're going to miss out on from buying a house versus rent? So let's break that down. A quick buy versus rent analysis with the same numbers that we just used. So in the column here to the left, you have, if you purchase the house, estimated monthly payment with taxes and insurance, mortgage insurance, everything, you're going to be right around $4,000 a month. If you rent that same property with your renter insurance, it'd be about $3,800. So it's a little cheaper to rent in this scenario. This is actually from a live house that we pulled. Now, annual rental increases do go up, usually about 3 to 4% per year. So we put in 3.5% rental increase. So over time, by buying versus renting, just from cash flow perspective, over the course of 7 years, you'd save about $9,000 because your payment on the mortgage is going to remain relatively stable. It's not going to go up. Your taxes are capped at 3% per year. Your insurance might fluctuate a little bit, but the principal and interest is fixed. Now, we take it over 7 years, cash flow, you save about $9,000. Well, that's really not that much money. But one of the beautiful things about buying a house is appreciation and amortization. So appreciation is your home going up in value. Now, if we look at history, over the course of all of history, home value appreciation is typically about 4%. Usually it's more, but we're going to use 4% just as a baseline because that's the historic number, and that's also the forecasted appreciation number as well. So taking this over 7 years at a 4% appreciation, you can see here your appreciation gain in value is about $159,000. Now another cool thing happens, it's called amortization, meaning that every time you make that mortgage payment, the balance of that loan goes down. So over the course of 7 years, you're going to pay down about $46,481 in amortization. Now, if we add all those together, if you were to buy a house versus renting in 7 years and you were to sell that property, you'd stick $161,000 in your pocket. That's real money. That's how wealth is created. Ask anybody who invests in real estate and they understand these items. They understand appreciation, they understand amortization, and they understand why it makes more sense to own versus rent. So if we wrap all this up in a nice little bow, basically what we're telling you, if we go back a slide, is that you could literally buy a $500,000 house for $3,600 out of pocket, have a super low payment because it's a subsidized interest rate. Now rates are a little higher, but listen, it's lower than market. And then if you keep the house for 7 years, got 161 grand. So that's the value of owning versus renting. And those are the real numbers. So listen, if you know anybody that's looking to purchase, if you have any clients or anybody that is, in the kind of the renter's trap, forward this video to them. Maybe it's helpful. We'd love to chat with you, get you any more information you need on this program. Like I said, it's probably going to be gone within the next, say, 30 to 60 days. But anything else we can do for you, I'm here for you. Have a great day. God bless you. Bye-bye.